Recently, big Wall Street bank Morgan Stanley warned that housing affordability is deteriorating faster than at any point in its data history. The problem is that home prices are still rising while interest rates on mortgages are surging higher, which is highly unusual. Higher mortgage rates usually push home prices down by cooling demand. So this brings us to the question everyone is asking: will the housing market crash in 2023? Real estate isn't a complex asset class. Prices are driven by three key factors: mortgage rates, income, and inventory. The reason housing dynamics are skewed right now is that one factor has changed rapidly, the mortgage rates, while the other two haven't budged much. However, this could be changing though, as we are likely to see a spike in unemployment as part of this recession. So to learn more about that, click the card above or just wait until the end of this video. The average 30-year mortgage rate in October of 2021 was roughly 3%. In October 2022, the average rate surged to 6.6%, which is more than double. The swing in interest rates has certainly begun to cool demand in the market, with sales of existing homes down over the last 7 months consecutively. In August of 2022, sales dipped to their lowest level since the pandemic. However, listings have also dropped rapidly. Many homeowners who locked in low rates for 30 years are now reluctant to put their homes on the market and switch to higher interest rates. As of September, the number of home listings across the U.S. was 42.6% lower than the pre-pandemic average from 2017 to 2019. So will we see a 2008 housing crash in 2023? That is the million-dollar question everyone is asking, so let's jump right in, starting right now. Hello and welcome to Ask the Lender. This is your go-to channel to stay up to date on the economy, the housing market, interest rates, as well as learn little-known strategies to building wealth and paying less money in taxes. If this is your first time here, a big welcome to this community. If you haven't already, please click that subscribe button and smash that bell right there to get notified when I post more helpful content just like this. And also do this channel a huge favor and like the video and share a comment below to let the algorithm know that this content should be seen by more people just like you. If you or someone you know are in the market to buy or sell a home, then you are probably wondering, should you buy now or should you wait to see what happens in the housing market as we head into 2023? The truth is, no one can accurately predict what will happen, so if you need a place to live, buying now will be a better option than renting. Even if housing prices drop 10%, you will still pay more money for the same house if rates jump to 9% versus the current 7% rate on a 30-year fixed mortgage. However, if you are still uncertain, make sure to stick around until the end where we discuss the two options that are available to you when it comes to buying a home. Look, crash is a big word, especially when you're talking about real estate. But looking at current economic conditions and recent financial uncertainty, plus the rising mortgage interest rates, it's easy to wonder whether the housing market, after years of red-hot increases, will crash in 2023. Look, people wondered the same thing last year about the housing market this year in 2022. Some so-called experts who believe that while the market won't crash as it did in 2008, it will experience a course correction next year in 2023. These same experts also feel that interest rates will even out and housing prices will decrease, but at a slower rate. Inventory will remain limited as baby boomers stay in their homes while millennials looking to enter the housing market are kind of held back. In much of 2020 and 2021, demand for homes was high and supply was low. Interest rates were at historic lows. Put together, these factors created a hyper-competitive seller's market, with buyers swarming to new listings, making cash offers, and hurrying to outbid each other. Now prices are still high, but they're stabilizing, interest rates are climbing quickly, and competition is lessening. The National Association of Realtors reported that home sales dipped in July and August, showing a decrease in demand that many attribute to rising mortgage interest rates. But is all that enough to lead to a crash? While these factors may have some people wondering if this means we're headed for another housing crisis like the one we saw in 2008, the answer is, well, no, at least not yet. The truth is that home values will differ by local markets, and a broad market crash is unlikely. The 2008 market crash was a result of several years of risky mortgages being given to buyers who were simply not qualified to to buy a home. This, combined with adjustable rate mortgages that had prepayment penalties and rates that had almost doubled, this caused thousands of Americans to lose their homes to foreclosure. Most of the loans now are under 4%, and buyers had to prove their credit worthiness. Some experts expect demand to pick up again soon, particularly after the enormous rent increases many people saw this year in 2022. It is likely that by spring, people will not want to continue to pay this rent, and there will be more certainty in the market. And we may see a big boom in home sales. An increase in demand may not be matched by an increase in supply. You're going to see the amount of trade-up buyers cut drastically for the foreseeable future. Trade-up buyers are current homeowners looking to purchase a bigger or better property. When these homeowners move on to their second or even their third or fourth home, they free up smaller and often more affordable homes for first-time home buyers. Fewer active trade-up buyers may mean that there are fewer entry-level homes on the market, which in turn means fewer options for new home buyers. As with most things though, there's more at play than just current conditions. So what are the two options available to you if you're in the market to buy a new home? Look, it's not rocket science. Simply put, they are to move or to wait. It's not profound, but let's not make things more complicated than they already are. Rising interest rates will slow or prevent a market crash by keeping demand among current homeowners low. With rising interest rates, current homeowners who may want more space aren't as keen to sell just yet. See, you may be going up $100,000 in home value, but your mortgage payments could double if you're trading in an interest rate that you locked in pre-COVID. Let's say it's around 3.5%, and now you're going to go to one that's 6.5 to 7%. People are looking at that and saying, I would like more space, but I don't want to give up this good interest rate. And that's going to curtail demand. And we've already seen a softening of prices, and I think that's going to continue. The average home price has increased dramatically over the last 3 years, but those prices are about to drop back down, and I don't feel that they are going to plummet like we saw in 2008. But full disclosure, I'm not a fortune teller, I'm not a financial advisor, I'm just a hardworking father of four, a U.S. Navy veteran who likes to help potential home buyers navigate the road to homeownership. I am a licensed loan originator, so if you or someone you know is in the market to buy or sell a home, hey, let's chat. Personally, I feel that the market is going to level off because it's already gone up so much. It's gone up by 30 to 40%, so if we have a correction of 20%, we're still up 20%. If homes are sitting on the market for a longer period these days, that's not necessarily a sign of a crash. It could simply be a matter of pricing. Homes are only sitting on the market because sellers are not willing to negotiate. So when it comes to option number one, to move, now may be a great time to negotiate with these sellers who need to sell their home, and maybe they are willing to accept offers that were not even considered acceptable 6 months ago. For example, recently I've seen 3 of the last 4 purchase contracts that have come into me. These have included the sellers paying 3% of the closing cost, plus there were appraisal and finance contingencies written into the contract. The second option would be to wait it out. Right now, economists are divided about what comes next for home prices. Skylar Olson, chief economist at Zillow, told Money.com he believes prices are likely to remain stagnant or rise a little bit by 2023. Considering the tight supply currently, Nadia Evangelou, senior economist and director of forecasting at the National Association of Realtors, she seconded Olson's forecast. However, other economists at Moody's told Fortune they anticipate house prices could drop by 15%, while some of the most overvalued real estate could see declines as deep as 30%. A correction that severe would certainly have a positive impact on housing affordability. And if it coincides with a much anticipated Fed pivot on interest rates, affordability could rapidly improve. But there's no way to know for sure. If you are optimistic about home price declining, it could be a good idea to wait for better affordability next year. And if you have more questions, let's chat. My contact info is in the description below, and just a reminder that if you haven't already, subscribe to this channel and click that bell right there to stay up to date and informed. Also, share your comments below on how you feel the state of the U.S. housing market and economy are going. And also check out the video right there to see why the Fed wants to increase unemployment. And I'll see you next time on Ask the Lender.